What's your take on this? I know you've been writing about Bitcoin here and there for years now, Francisco. Has it now been widely accepted in the institutional investment community?
Well, look, I think cryptocurrencies in general and Bitcoin in particular are, to your earlier question, I think they're clearly tokens, and tokens are commodities. So I wouldn't necessarily qualify them as currencies. Currencies are issued by a government. Bitcoin or any cryptocurrency can be issued by almost anyone, right? So in that sense, it's a bit of an unusual setup. So I would qualify that. I think it's more of a commodity than it is a currency, a crypto token. The second thing I'd say is that if you think about this particular construct that Bitcoin has, remember that 90% plus of the coin is held by less than 1% of the account holders. So there's a very high concentration of the early adopters that haven't really sold. And again, if you think about supply and demand, it's just one of those things that there's been a flurry of demand and frankly not very much supply, because first of all, the supply is capped longer term.
Right.
And that's been the issue. So it's extremely volatile. Compare it to any other commodity, the volatility of cryptocurrencies is way higher in most cases.
So, Francisco, I want to ask you, what do you make, though, of a year where you've got Bitcoin up more than 300% here in 2020, and you've got gold on track to have the biggest annual advance in a decade? How do you kind of juxtapose those two? And how do you kind of make sense of that?
Right. So, to me, it's quite straightforward. We've had, of course, a flurry of liquidity that's coming to the market from the central banks. The Fed's balance sheet's more than doubled as well throughout the period. So naturally, when you inject so much money, remember, we were talking about currency before, right? So currency is created by governments, and when the world's most important central bank in the world's largest economy injects so much liquidity in the financial system, all assets tend to benefit from it. And that's what we've seen. Now, if you think about airline stocks, or you think about other assets that have been severely impacted by mobility, which is really what the COVID-19 crisis is about, they've not gone back to previous historical records. But other asset classes that were in some way constrained, they've surged. And of course, that's included commodities like gold or silver. It's also, like I said before, it's impacted. Think about electric vehicle stocks, right? I mean, those have also taken off in a huge way. So I think liquidity has been driving this enormous divergence in asset values that we've seen, because central banks, with the Fed at the helm, were trying to support the economy and particularly the financial markets.